Welcome to the Big Four Accounting Firms podcast, brought to you by thebigfouraccountingfirms.com. Check out our blog and subscribe to our podcast for career advice, recruiting secrets, and the latest Big Four news. Hope you enjoy the show.
In today's podcast, we are going to be discussing the latest news about the Big Four possibly being broken up. And this report was a result of the Carillion collapse. And Carillion was a large construction company in the UK and has been in the news a lot lately as far as accounting scandals go. And now the Competition and Markets Authority in the UK must look into breaking up the Big Four. And also there's another panel that is looking into the Financial Regulatory Authority to find out whether they are competent at their jobs of regulating the Big Four. And the Financial Regulatory Council, as you might know, is the regulator of the Big Four in the UK. And this report from the UK government was apparently pretty stinging for the Big Four because it had some pretty harsh things to say about them. And it also had harsh things to say about the current accounting environment. The report said that the current accounting environment favors the oligopoly, which is the Big Four, but it fails the public. And what they're referring to here is that the Big Four right now operate as if there's no competition and they're not doing their jobs on these audits. And they're failing the public by not auditing these numbers close enough and not catching these companies going under. And in this time it's the UK and it's been in South Africa before. And they also said that KPMG was complicit in the company's shady accounting practices because Carillion was recognizing too much revenue and KPMG was overlooking it, and not only just overlooking it, they were also involved in it. And another thing they found was that Deloitte was paid over £10 million to act as the company's internal audit function, but they failed to do a good job. And they also said the Big Four audit 99% of the FTSE 100 companies and 97% of the FTSE 250 companies, which means that they basically have a monopoly on auditing in Europe. And the Parliament in the UK is worried about that. And also another troubling thing was that the Big Four received around $50 million in fees from this company, but they weren't able to spot any wrongdoing or any problems in the accounting. But it's not even really just this report that is stinging. There are other things in the media that are coming out that are pretty harsh. Like other things that came out in the media was, how come the Big Four couldn't see the collapse of their large client here when others could? Because apparently there was short selling going on in 2015 before the collapse of this company. So people did see that this company was paying high dividends while borrowing heavily, and they saw that it was going to go under, couldn't continue on for forever. So investors knew this, and they shorted it. So why couldn't the Big Four and these smart partners of the Big Four, whether it was the auditor, which was KPMG, or one of the other Big Four that was making millions and millions of dollars and pounds off of this company? And one of the most interesting things and well-said things I saw in the press was that somebody said that the Big Four are franchising their name, but not the quality of the audits. And this is true because these accounting scandals just keep getting bigger and bigger. And that's really what the Big Four are doing across the world. They're letting other companies and other countries use their name of KPMG or PwC, but in these countries, these partners aren't doing their job necessarily. But when it comes to who's holding the bag at the end of the day, it's not the Big Four. It's the investors and the employees of these companies that go under. And the Big Four are making millions of dollars to audit the companies and say whether their financial statements are in accordance with accounting principles. And they're saying, yes, they are materially, but obviously they aren't. So there's obviously something wrong in the system. And that's what the UK is trying to investigate, and they're trying to figure out what to do. And another interesting thing in the news was that one of the Big Four's leadership members admitted that the Big Four have an unfair advantage. The UK chairman of KPMG, Bill Michael, admitted that the Big Four have an oligopoly on financial statements, and just an oligopoly in general, and says that the Big Four can't be all things to all people and not have conflicts of interest and not have problems. He said that the issue needs to be investigated and corrected. And that's very interesting to have one of members of Big Four leadership actually come out in the press and calling for their regulation and breakup and investigation. So that's very interesting to me, and he's really sticking his neck out there. With all that being said, I wanted to get into 5 reasons why I believe that the Big Four will not be broken up. But before I get into those reasons, a word from our sponsor, Right Networks. Right Networks is a hosting solution for forward-thinking CPA firms, accounting professionals, and small and mid-sized businesses. Right Networks helps accountants move their accounting-based desktop and legacy applications to the cloud, giving you the freedom and flexibility to scale your business expand into new locations, and deliver an ever higher level of service. To learn more, give Right Networks a call at 888-417-4448, extension 1. Now let's get back to the show. Okay, now let's get into the reasons why the Big Four will most likely not get broken up. Now, the first reason is that the Big Four pay money in lobbying, directly and indirectly. Now, the government is posturing here as if they will break up the Big Four. They're deploying these investigative panels, but they already have all the information they need to break up the Big Four. They're an oligopoly, they have accounting scandals, there's conflicts of interest, but they also realize it's not possible. And they are also paid to realize that it's not possible. The Big Four make over $130 billion per year globally. They're not going to make $130 billion a year and not pay millions of dollars to lobbyists to make sure that their interests are told to the government. And the government are going to listen to those interests. And it's not just lobbyists, they're members of interest groups that influence government positions. So the Big Four are well entrenched in the political environment. And even though it's a popular position now to say the Big Four will be broken up, it's not like this hasn't happened before and that the politicians can't be influenced out of changing their mind. And another thing to keep in mind as far as government goes is that the Big Four are significant government contractors. So the government isn't necessarily interested in destroying companies that are so favorable to them. And this leads me to the second reason of why I believe the Big Four won't be broken up. And this is because the Big Four employ a lot of people. Another reason the Big Four won't be broken up is because they employ 944,968 people around the world. And that has also a lot of sway with politicians and governments and the public at large. The Big Four employ a lot of people. So even though they might have a few bad actors in them, they are still seen as a net positive in society because they provide so much employment. The Big Four make their money off of professional services, and part of providing professional services is selling services of people, so they have to employ a lot of people, and that's seen as a good thing in society. And now let's move on to the third reason why I don't think the Big Four will be broken up. And the third reason is that breaking up the Big Four into audit-only, tax-only, and consulting-only firms won't solve the problem. Having audit-only firms, which is a solution that's being pushed out there right now, to increase independence will not necessarily lead to higher quality audits. What type of talent would you attract to an audit-only firm? Not many people would be pumped up to go to a firm that only performs audits, because not only is the work boring, but is also slowly being replaced by technology. So how are you going to convince young recruits to join an audit-only firm? And even if people plan to do audit their whole careers, at least the Big Four offers the potential to go into other fields, like consulting or tax. And within consulting at the Big Four, there are a million different opportunities, like cybersecurity, blockchain consulting, cloud hosting consulting, that keeps people hanging around and wondering, what if they were to switch to consulting? And so that's an incentive for many people to work at the Big Four, is just the level of opportunities there. Whereas if you worked at an audit-only firm, how quickly would it take you to want to leave that firm? Because your opportunities are very limited, and if you don't like the job, then it's much easier to make the decision to leave because you're not distracted by so many opportunities. And that leads me to the fourth reason why the Big Four won't be broken up. And the fourth reason is because breaking the Big Four up into smaller accounting firms wouldn't lead to more competition. Breaking up the Big Four into smaller firms wouldn't necessarily lead to more competition. Most likely, if the Big Four were to be broken up, what would happen is that a small amount of the firms that were broken up would be more successful than others. And then another oligopoly of major accounting firms would take hold. And what I'm saying here is that breaking up the Big Four into something like the Big Eight or the Big 10 would eventually end right back up where the Big Four or the Big Three or the Big Two. In all populations in society, there's always a small percentage of individuals that outwork the rest. There's a small percentage that do the most work or that succeed or that are willing to overachieve. And so if you break them up, most likely what's going to happen is only some of them will succeed. And again, you'll end up in this oligopoly position. So it has to be more thoughtful. And I'll get into that in my next point. It's the fifth and final reason that the Big Four won't be broken up. The last reason that I don't think breaking up the Big Four will happen or work is that breaking them up won't solve the problem and won't make them more competitive. The Big Four isn't competitive because of basic values. No matter what the Big Four values on their websites and in their advertising campaigns. Their number one value is selling. Always be selling. That's their motto. They're never going to say that out loud. It's always pushed on you behind the scenes. And this is something you'll learn as you work in the Big Four. They make their partners sell around the clock. And this even includes key audit partners. Their partners on huge audit clients, like Carillion, aren't allowed to focus on their audit clients or audit quality. They're forced to be out selling to smaller clients or other big clients. They either have to be winning smaller greenfield or white space clients, which are these new opportunities at smaller clients, or they have to be out at large Fortune 500 and FTSE 100 clients selling them audit consulting services. The Big Four are constantly growing in revenue and in headcount, and in order to meet those revenue and headcount goals, partners can never stop selling. Therefore, audit partners are never allowed to be okay with auditing and focusing on audit quality. You always have to be thinking about selling and entertaining clients. And this is always in the back of your mind, even if you're trying to audit a company and trying to maintain high standards. If you're meeting with the CFO, you're thinking in the back of my mind, oh, did I sell that project? When should I close that project? Who do I have out meeting with this client? You're never really focused on quality. You're focusing on how to sell the next project and what service to sell. And, my firm just rolled out this new service. How am I going to sell that to my 10 clients? And I have to schedule meetings with all of them because we just launched a new service. You're not really focusing on audit quality, or these partners aren't able to do that. So in order to help improve audit quality, the people that are in charge in the most important audits of the world have to be separated from those selling at the Big Four. There needs to be people at the Big Four solely focused on selling. And I know some people are going to say that already exists, but it does not exist across the board. Many audit partners are forced to be selling. The problem with this is that if you are on a large audit at the Big Four, it means you are usually a pretty sharp and charismatic partner, which means that many large clients in the market are interested in meeting you and hearing your thoughts on tough accounting issues. But in order for things to change, smart audit partners need to be able to focus on tough audits, and they need to be rewarded for doing a good job and being independent and not having conflicts of interest. They shouldn't be rewarded for selling more work. They should be rewarded on having excellent audit quality. But that is not even being contemplated right now. So I don't think this Big Four accounting scandal issue will be solved anytime soon. And I definitely don't think it will be solved by breaking them up.
If you need help and guidance through your Big Four recruiting process, make sure to check out our links to our books and courses in the show notes below. For additional Big Four career insights, tips, and tactics, visit our Patreon page, whereas for as little as $1, you could start receiving unique guides and checklists to help you throughout your career. Support us by not only donating to our Patreon page, but also by subscribing to our podcast on iTunes, Google Play, Stitcher, or your favorite podcast player today.